The first thing to consider is why you want to become a consultant. There's no single right answer, but having a clear reason will shape how you approach your business, your clients, and your goals. Whether it's flexibility, independence, or a desire to do more meaningful work, your why is the foundation of everything that follows. Are you using consulting as a bridge between jobs? Do you want to build a business, or are you using it as a path to transition into a full-time role? People consult for different reasons, and your motivation will guide how you structure various aspects of your business. Being clear on this helps you stay focused and make better decisions. Consulting changes how you work, how you get paid, and how your responsibilities are defined. It comes with both risk and opportunity. As a consultant, there's no guaranteed paycheck. Your income may fluctuate month to month, and you're responsible for consistently finding and retaining clients. You won't have built-in benefits like health insurance, short or long-term disability, or paid time off. Depending on your work, you may also carry more legal and professional liability than you did as an employee. At the same time, you gain what many people value most: flexibility. You control your schedule, your work style, and who you work with. Your income isn't capped, and your earning potential is tied to the value you provide and the time you choose to invest. Over time, you can build a brand and a business that reflect your strengths, values, and vision. How you structure your business comes back to why you're consulting. In this presentation, we'll walk through some of the key considerations for setting up your business. We'll also cover practical ways to mitigate risk while keeping costs low, so you can make informed decisions and set yourself up for long-term success. Where do I start? The first step is to define your expertise, what you're really good at, what you enjoy, and what people will pay for. That forms the core of the services you offer. You also want to be clear on your scope, what kind of work you will and won't take on. It's helpful to remain flexible until you have established yourself, so if work slows down, you have more opportunities for work. Next, think about your niche. Where does your experience line up with market need? What kind of clients would benefit most from your expertise? And how do you compare to others offering similar services? Defining your target market and understanding your competitive edge can help you position yourself more effectively. In most cases, you're going to get work through your network. That's how consulting usually starts. People who already know you and trust you. So, it's important to stay connected and visible even when you're busy. Reach out, check in, and keep in touch with people so you're not starting from scratch when you need your next project. A website can help reinforce your credibility. It doesn't need to be complex or expensive, just something clean that shares who you are, what you offer, and how to get in touch. These days, it's relatively simple and inexpensive to set up a basic website. Most domain providers offer tools that make it easy to build something functional without needing coding skills. If you have HTML experience, great, but it's not required. Having your own domain also gives you the option to create a professional email address, which helps reinforce your credibility. Even if you're not expecting to get clients through your site, it gives people a way to find you, verify who you are, and understand what you do. If your goal is to grow beyond solo consulting, whether that means hiring, building a brand, or scaling, then you'll also want to think about branding and long-term positioning. That's where things like messaging, visual identity, and marketing strategy come into play, and where a business plan may become more important. Choosing a business structure. When setting up your consulting business, choosing the right legal structure is one of the most important early decisions. It affects how you're taxed, how much liability protection you have, and how much administrative work is involved. Let's start with the simplest option, the sole proprietorship. This is the easiest structure to set up, and in many cases, you can operate under your own name without filing anything additional. If you want to use a business name, you'll need to register a DBA, doing business as, which also allows you to get a separate tax ID. Although you can set up your business using your own name and social security number, a tax ID allows you to use a number other than your social security number to get paid. All income is reported directly on your personal tax return. But the key limitation here is that there's no liability protection. If there's a legal or financial issue with the business, your personal assets could be at risk. A single-member LLC adds liability protection by legally separating your business from your personal assets. It still uses pass-through taxation, meaning income is reported on your personal tax return just like a sole proprietorship. However, it's important to keep business finances separate. That includes setting up a dedicated bank account. One of the benefits of this structure is that it offers protection without much administrative complexity, which makes it a popular choice for independent consultants. A multi-member LLC is similar in many ways but includes more structure due to shared ownership. You'll need an operating agreement to outline roles, responsibilities, and how income or losses are divided. It still qualifies for pass-through taxation and offers limited liability protection, but the management structure is more formal than a single-member LLC. Then there's the S Corporation. This structure is more complex and operates as a separate tax entity, meaning you'll file corporate returns in addition to your personal tax return. It also requires a board of directors and formal corporate governance. For some consultants, the S Corp offers tax advantages. For example, the ability to split income between salary and distributions. But the trade-off is higher administrative overhead and stricter compliance requirements. Regardless of the structure you choose, it's important to understand the liability and tax implications and to follow both state and local requirements for business registration. Business operations. Once the business structure is in place, the next step is establishing operational systems, the practical elements that keep the business organized, protected, and compliant. Start with registration and a tax ID. For sole proprietors and single-member LLCs, registration is often straightforward and handled online through your Secretary of State's office. A federal tax ID, EIN, can be obtained for free via the IRS website. A business bank account is essential to separate personal and business finances. This supports liability protection and simplifies accounting. You'll need business registration documents and your EIN to open an account. Contracts and agreements should be mutual, clearly written, and free of one-sided terms. Anything unclear should be reviewed by a legal professional. It's wise to include limitation of liability clauses and disclaimers to reduce risk. Early legal review can inform future agreements. You may also obtain template language from a lawyer or earlier agreements that can be used in future contracts. Business insurance depends on the services offered. Common types include professional liability, errors and omissions, and general liability. These protect against claims from mistakes or dissatisfaction. Whether to purchase coverage depends on contract requirements, risk level, and personal preference. In most consulting work, the greatest consequence is early termination, but higher risk industries may warrant greater protection. Accounting and invoicing can be tailored to your needs. Cloud-based tools like QuickBooks offer expense categorization, time tracking, and invoice generation. Simpler methods using spreadsheets also work, as long as they're accurate and organized. Invoices should clearly list the work performed and the amount billed. Hourly work should be backed by detailed time logs, even if not required by the client, in case justification is needed later. Tax payments are usually made quarterly as estimated payments to state and federal authorities. Requirements vary by state. Setting aside funds in advance helps avoid penalties. Accounts receivable are payments made to you. This includes payments by clients. Consulting contracts typically use monthly billing with net 30 terms, which means your invoice is due for payment 30 days after receipt. Avoid net 45 or net 60 terms to reduce cash flow delays. Consider including late fees or retainers if timely payment is a concern. For reimbursable expenses, define billable categories in the contract and require 100% reimbursement at cost if possible. Note that reimbursement delays mean you may carry the upfront cost for weeks. travel time may be billable at your hourly rate, but mileage is often not reimbursed. Asset tracking applies to items such as computers or office furniture that may need to be depreciated. An accountant can advise whether and how to do this based on value thresholds and tax rules. Expense management includes both reimbursable costs and general business overhead. Tools like Mile IQ can automate mileage tracking, or a manual log can be used. Businesses may deduct mileage using the IRS rate or prorate actual vehicle expenses based on business use. Just be consistent. If a dedicated home office is used exclusively for business, a home office deduction may apply. However, this can reduce the home's cost basis when sold, possibly increasing capital gains taxes. A tax advisor can help assess whether this deduction is worthwhile. Putting these systems in place early helps support efficient daily operations, reduce risk, and establish a strong foundation for long-term success. Benefits. Smart planning starts with knowing your options. While consulting offers greater flexibility and independence, it also means you're responsible for your own benefits. These include health insurance, dental and vision coverage, disability and life insurance, vacation planning, and retirement savings. Understanding your options will help you make informed decisions and avoid unnecessary financial risks. Health insurance is one of the most important considerations. If you're working alone, you can obtain coverage through your state's health insurance marketplace or directly from insurance carriers. In many cases, going directly to the insurance company provides access to a wider range of plans. Consulting an independent insurance broker can help identify the best option based on your health needs, location, and income level. If you have employees, you may also be eligible to purchase a small group insurance plan, which often provides better coverage at lower cost. Dental and vision insurance are also available, but often have limited benefits. Dental plans typically cap annual benefits at a few $1,000s, which may not justify the premiums. Vision plans vary in value depending on what's included. It's worth reviewing the actual benefits and calculating whether the coverage makes financial sense for your needs. A health savings account, HSA, may be available if you're enrolled in a high-deductible health plan. HSAs allow you to set aside pre-tax income for medical expenses and can be a valuable tool for reducing taxable income and managing out-of-pocket costs. Unused funds roll over year to year and can accumulate over time. Short and long-term disability insurance protect against income loss if you're unable to work due to injury or illness. If you have fewer than 5 employees, policies must be individually underwritten, which may be expensive depending on your health history. The value of disability insurance depends on your risk tolerance, your proximity to retirement, and any known health issues. Life insurance also typically requires individual underwriting unless you're part of a larger group. Premiums and eligibility will depend on age and medical history. As with disability insurance, it's important to assess whether the policy offers sufficient value based on your situation. Vacation time is not standard in consulting, but can be addressed in your contracts. Most agreements simply require notification before planned time off. However, it's critical to avoid contract language that mirrors employee benefits, as this could raise questions about worker classification. To preserve your status as an independent contractor, avoid terms that imply employment, such as formal vacation accrual or supervisor-approved time off. Retirement plans are another key consideration. Independent consultants can open a simplified employee pension, SEP IRA, or solo 401k. Contribution limits are significantly higher than standard IRAs, allowing for greater tax-advantaged retirement savings. For example, SEP IRAs allow contributions of up to 25% of compensation, or $69,000 in 2024, whichever is less. Finally, it's important to recognize that consultants typically do not receive employer-sponsored bonuses, equity, or profit sharing. Your income is based on your hourly or project rate, and compensation is limited to the terms you negotiate. Speaking with a financial advisor, insurance broker, or tax professional can help tailor a benefit strategy that aligns with personal risk tolerance and long-term goals. By proactively setting up benefit coverage that suits your needs, you can protect yourself from unexpected risks while maintaining the flexibility that makes consulting appealing. Engagement models and pricing. When considering consulting engagements, it's important to understand the different models and how they impact your rate, your control, and your client relationships. Pricing structures generally fall into two categories: project-based and hourly. Project-based pricing offers simplicity, but it carries risk. If the scope is unclear or changes during the project, the consultant may end up doing more work than initially anticipated. Since it's difficult to predict what challenges may arise, it's important to clearly define the scope in writing and include provisions for handling out-of-scope work. Project-based pricing is often requested by clients with fixed budgets. In such cases, it should be clearly communicated that the estimated cost may need to be higher to accommodate unknowns. Hourly rates provide more flexibility and more accurately reflect the time invested. A common rule of thumb is to base the hourly rate on prior annual salary. For example, someone earning $100,000 per year would target $100 per hour. This captures both compensation and general business overhead. Adjustments can be made based on expertise, risk level, client expectations, and industry standards. There are three main types of consulting engagements. Direct contracts provide the most control and typically the highest pay. These involve working directly with the client organization. You'll likely be brought in through an existing relationship or referral. Subcontracts are managed through a third party that has a direct contract with the client. The subcontractor may have limited visibility into the client relationship and may receive a reduced rate. Staffing agency contracts often provide access to opportunities you wouldn't get on your own, and some offer benefits. However, they usually take a significant share of the rate, often 50% or more, which reduces your earnings and influence over the engagement. There's no best option. Each has trade-offs. Direct contracts give you the most control and best compensation. Some contracts and staffing agreements may involve trade-offs in compensation, but can provide steady work. Hiring subcontractors requires formal agreements. A written contract should define scope, rate, payment terms, and expectations. A completed W-9 form must be collected from each subcontractor. Consultants are responsible for issuing Form 1099 NEC to any subcontractor paid $600 or more in a year, unless the subcontractor operates as an S corporation, in which case a 1099 is not required. An accountant can assist in determining filing requirements and help with 1099 preparation if needed. Payments can be made by check or through electronic tools such as bank-issued bill pay, Venmo, business accounts, or other secured payment methods. It's important to maintain detailed records of all payments for accounting and tax purposes. By selecting the right engagement model and planning for potential subcontractor relationships, consultants can better manage their workload, optimize compensation, and build a scalable, sustainable business. Project execution. Successful project execution depends on having the right setup, tools, and clearly defined expectations from the start. Begin with a dedicated business computer. If you're structured as an LLC, this is essential to maintain separation of business and personal assets. Regardless of structure, it helps ensure compliance and security. This system should include antivirus protection and support secure archiving of documents, especially if the contract allows you to retain a record-keeping copy of client work. Next, clarify who provides the required tools or system access. if specialized platforms, licenses, or proprietary systems are involved, determine whether the client will provide them. This should be addressed early and included in the contract. So regulated or sensitive data, such as information governed by GDPR or HIPAA, it's best to use client-provided systems to avoid exposing your own network or devices. This reduces risk and ensures appropriate security controls are in place. Data privacy terms should also be defined in your contract. Specify how sensitive data will be accessed, handled, stored, and protected. This sets expectations and reduces legal exposure. Finally, clearly define deliverables and expectations in the contract or work order. Outline what is to be produced, how it will be delivered, and when. This ensures both sides are aligned from the outset. If scope or expectations change, document those updates to protect both parties. Clear responsibilities, secured systems, and defined outputs are the foundation for smooth and professional project delivery. Business plan. Many of the decisions covered throughout this presentation, from business structure and insurance to pricing, client engagement, and tools, are the core building blocks of a business plan. Whether or not you choose to formally document these elements, thinking them through is essential. A business plan isn't just for startups seeking funding. It's a tool for setting direction, tracking progress, and ensuring consistency as your business evolves. If you intend to seek external funding, add employees, expand significantly, or build strategic partnerships, a formal business plan becomes more important. It helps align decisions with long-term objectives and provides a reference point for adjusting course. The plan itself doesn't need to be complex. It can be as simple or detailed as you need. At a minimum, it should define your goals, describe your services and value proposition, identify your target market, and outline how you plan to generate revenue. It should also include your marketing strategy, operational infrastructure, and plans for growth, if applicable. Anticipating potential risks and laying out clear milestones helps track progress and flag issues early. Pros of formally documenting a business plan: provides clarity and structure, enables goal tracking and accountability, useful when applying for funding or loans, helps communicate your strategy to collaborators or stakeholders. Cons of not documenting it: makes it harder to track progress or pivot strategically, can lead to inconsistent messaging or ad hoc decision-making, missed opportunity to identify gaps in planning. Ultimately, creating a business plan is about solidifying the foundation of your consulting business. If you've worked through the topics in this presentation, you're already most of the way there. Putting it in writing simply helps bring it into focus. Business plan outline. This outline represents a typical business plan structure. The executive summary captures the purpose and scope of the business at a high level. Services and clients describes what you offer, who your target audience is, and how you add value. Market analysis helps you understand competitors and define your unique positioning. Your pricing strategy should reflect both business value and market expectations, including hourly versus project-based models. Marketing and outreach cover how you'll gain visibility, build credibility, and bring in work. The operations section includes your day-to-day workflows, tools, staffing, and delivery approach. Legal and risk refers to contracts, business structure, insurance, and privacy or compliance matters. Financials should address revenue projections, budgeting, and cash flow. Lastly, growth planning may include adding services, subcontractors, or entering new markets. Even if you don't formally write a business plan, these are decisions you'll likely consider while setting up and operating your business. Putting them in writing provides clarity, focus, and a roadmap, especially helpful when planning for expansion or seeking funding. In summary, building a consulting business involves thoughtful decisions about structure, operations, and how you present your services. Your choices should reflect your goals, risk tolerance, and the scale of your plans. While there's no single path to success, there are critical elements to consider, such as business structure, contracts, benefits, and tax obligations that set the foundation for sustainable work. It's wise to consult professionals like an accountant, attorney, and insurance advisor to ensure you're protected and compliant. Establishing those relationships early can make it easier to navigate questions or issues as they arise. Whether you're working as a consultant, freelancer, contractor, or gig worker, this framework applies across independent work models. There's significant flexibility in how you approach it, from highly structured systems to a more streamlined setup. As long as legal tax and professional standards are met, the approach is yours to define. The key is to build a business that works for you.